Hi everyone, welcome back to Smart Investing with Philippe. It's time for a weekly market wrap covering the QQQ, the SPY and the IWM, the Magnificent 7 and the big economic data drop this week. I've got monster inflows, tariff noise, things. Let's dive into it. Okay, now let's have a look at the QQQ. So you can see from this chart that we are still right in the middle of the bottoming process like we discussed a lot over the last 2 weeks. Nothing major is happening. You can see that despite all the noise with the tariffs, with the political aspect of Donald Trump presidency and the geopolitical risk and everything that is happening right now, the market is showing clearly that it doesn't want to go lower, at least for now. So it's actually showing that the QQQ is stabilizing, and the fact that the market is stabilizing is also witnessed with the VIX going down significantly from its peak. You can see that the VIX has been down almost like 35% since the peak of the 11th of March. So, and when the VIX is decreasing, it does show that the market fear and the volatility in the underpinning the market is slowing down, and the market participants are slowing down and coming down from all these uncertainties. So usually, and most often than not, the peak of the VIX is showing the bottom of the market, and you can see the peak of the VIX is actually coinciding with the bottom of the market over here. So I would say that the bottoming and the recovering of the market is still ongoing, and I don't think that the market will go much lower than what it is today, and that we are going to recover from here, especially that a lot of market participants are talking about the 2nd of April, when the whole new tariffs and the reciprocal tariff will just start to kick in. And a lot of people say that the negotiation and an agreement will be reached just before the 2nd of April, which will rally the market. SPY, you can see same story. Nothing has changed from over the last 2 weeks. The bottoming process is still there. We can see the low was coinciding also with the VIX high. And you can see that we are far from the low of 550, we are 564, and we are hovering that level, trading between these two lines, a clear channel of sideways trading. So the market is actually waiting whether they can go up or even lower, and that's why the uncertainty is still showing, and then the market are not moving at all. So despite all the noise, all the panic, all the negativity in the market, and all the negativity that you've seen on the AAI survey, the highest ever negativity level, the bearishness level, is actually right now even worse than back in 2022 and the COVID time. So it really shows you the level of fear and the level of bearishness in the market, which usually is showing like a sign of bottoming, and that the market will recover from that highest level of bearishness. So this is now at the level of extreme fear in the market. So you have to understand that an extreme fear in the market is always a sign of bottoming. If you look now at the IWM, same story. You can see the bottoming is still there. We are just trading within a tight range of 202 and 207, and we have actually defended quite well the level of 200, which was the upside channel of the long-term trend back in 22-24. And now we have retraced back everything that we've gained since the breakout over 200 level in 2024. So we have retraced everything back. So the IWM now has lost about 16-17% from its peak. And this is actually the biggest drop in the market indices that we've seen so far. I mean, the QQQ has dropped about 15% from the low, SPY about 10%, and IWM is very close to 18-19%. And of course, the MAG7 that we're going to see now are also showing a clear sign of bottoming. You can see still defending the Fibonacci level of 0.61, retracement level 0.61. You can see has been trading sideways over the last 2 weeks. We can see that the downside of 22%, which is actually a big drop from the peak, because we went to minus 2022. Now we are minus 19. And you can see that this is a fair discount for the MAG7. I don't think this company has done anything wrong over the long term. So this is a clear opportunity to buy and to top up your investment, which I have done, and not at all a sign to sell and to panic. On the individual stocks, you can see AMD still stabilizing and showing a rebound, clearly defending its Fibonacci of 0.61, like we talked about the last few days, and still showing sign of recovering. Palantir, you can see, bottom around 75, and now it's clearly trading on the upside of 92, which Palantir is a very high speculative name. So if this name is rebounding from the low, that means the market is not so bearish than it seems to be. Otherwise, this stock will have collapsed further than the 75 level. I would say it would have collapsed much lower to probably 40 and 50. SMCI showing also a sign of recovery. You can see the low was around 35. Now we are around 42, which is a clear upside of about 20% from the low. And this is also a speculative name, so it is a sign that the market is going back to the speculative names, that they want to take the opportunity to buy these speculative names cheaper than it is. Bitcoin still hovering on the same level, and it's actually still hugging with the 200 moving average. Other than that, when we can see that TLT also not really moving, still trading sideways, waiting for some direction from the markets. VIX, we've talked about it, and otherwise that nothing really special, you know. Amazon, Google, Facebook, Nvidia, they all rebounded from the low. So let's go now to the economic calendar for this week, just to recap the highlight of this week. You can see that on Monday we had some retail sales number, which are actually showing a deceleration of retail sales month over month, and retail sales year over year, because we were expecting 0.6%, we had 0.2%, and retail sales year over year went down from 3.9% increase to 3.1% increase, but nothing really dramatic. We know that consumer confidence is going down, and that's some of the worries also in the market. If the consumer is seeing more inflation in the economy, they will also be hit further on the confidence level. So that's why the market is afraid of a recession, or at least a higher probability of recession, because of consumer confidence level, but also on everything that is being, but also on everything that can impact negatively consumer confidence. Example, inflation on tariff, or some slowing down in the economy, or probably unemployment level going up. On Tuesday, nothing really significant. Wednesday was a big day because you had the Federal Reserve interest rate decision. They decided to keep the rate the same, 425, 450. And what they were saying is that they think the inflation is temporary or transitory, and all the tariff inflation noise will subside over the medium term and long term. So they don't think it's a long-term trend into inflation number. They just said that there is a high uncertainty, and that's why the probability of recession has ticked up, but they are not really worried about recession right now. And they have just reminded that at whole time inflation, the recession probability is always around 0.25%. Sorry, is always around 25%. 1 out of 4, there is a probability of recession. So it has slightly ticked up, but it's nothing dramatic. When you hear 25% or 30% probability, it's quite near the low number of recession probability. So what they were expecting also is a two rate cut this year of 0.25%. And probably next year another two rate cut of 0.25% again. So they expect the rate to be next year about 3.4%. Unless recession will kick in, maybe the Fed will decrease rate faster to that level. But so far they want to take an approach of wait and see. First day we had a continuous jobless claim and initial jobless claim. I mean, nothing really standing out from this number. It's still the same story, you know. Employment market is still stable, not showing any sign of weakening. And that's why the Fed is not in a hurry to decrease rate. That's probably that's it for this week. Again, for those who are panicking, I just restate my advice. Don't panic. The bottoming process is still very much alive. You can see on all the main indices, the low has not been touched again. It could be that the low will be tested again before a rebound, but so far the market is showing a clear bottoming process. For over the last 2 weeks, we have been actually bottoming and trading sideways. So the panic and the level of volatility has come down quite significantly if you look at the VIX. And you can see that a lot of the uncertainty on tariff and geopolitical aspect is still ongoing, but a lot of commentators on the market are saying that the pain might be short-lived, and actually the Fed was saying that all the inflation and the fear on tariff is probably only transitory, and everything will go back to normal after all these political game that is happening right now with the White House and the rest of the world. So again, just keep your cool, stay invested. If you have money on the side, you can do some DCA on your favorite stocks. And if you have not, just hold your shares, don't sell, because if you sell into a panic, you're going to crystallize your loss. And again, be strong, psychologically be strong, and understand that correction of 10, 15, 20% is very common on the market, and you shouldn't panic for that. Thanks so much for watching. That's your wrap for the week. If you want to leave me your comment, I would be very glad to hear what you think about this market. Okay, smash that like button, subscribe for next week breakdown, and for next week's market update every single day. I will also add new analysis on single stock investment. Okay, I want to increase our community to 100 subscribers, and when we reach 100 subscribers, then I will add a lot more material into the channel. Free training, free analysis tool, a lot of free stuff, you know. But for that, I need to reach first the 100 subscribers, and please help me to do so. Subscribe, push the like button, and leave me a comment. Bye.